Today's video is a special one as I get to explain how I bought my first investment property in the real estate game. This is a fourplex in Las Vegas, Nevada. And the story of how I purchased it is pretty wild. It gave me a lot of experience because I had a lot of ups and mostly downs, but there were a lot of learning experiences throughout this process. And it took 1 full year to go from agreeing to purchase it to actually closing. And I'll share with you the details as well as all of the numbers, and I'm going to provide a video of what this property looks like. In order to buy my first investment property, I had to spend a lot of time learning and educating myself on this game. I think about a year educating myself and learning. This is through Bigger Pockets, this is through YouTube videos, online forums, Reddit has some real estate groups. I dove in, oh, and I forgot the most important part, books. So I dove in and basically read so much that I had a pretty good idea of the investing game and how to really get your first property. But little did I know all the challenges that would come with my first property. Next, I was able to surround myself with really smart investors, guys who are doing deals and guys who are 1 to 3 steps ahead of me. I think this is absolutely crucial. I was going to meetups regularly and meeting with people who had done deals before, and thankfully I formed a little small group. These are all really good friends, but also they're successful investors, and they were all ahead of me in this game. And throughout the process of buying my first property, I was able to lean on them and their advice, and that was worth $1 million in gold. It was absolutely valuable, and if you're a first-time investor, I couldn't recommend it more to get around people who have done a couple deals and can help guide you to your first one. Now the fun part of actually finding the deal. So what I did is I went online and bought a list. You can buy lists of properties for pretty relatively low price. But anyway, there's these services online where you can purchase properties, you can purchase lists of owners, and you give it certain criteria, and the criteria is endless. There's so many different options. You can pick city, state, you can pick equity, you can pick if they're in-state owner, out-of-state owner. This website is known as ListSource, that's where I purchased my list from. And essentially what I did is I bought a list of multifamily owners in Las Vegas, and I came up with about 400 to 500 names. This was not every multifamily owner, but it was within the certain criteria that I was looking for. So I had this list of 400 to 500 owners. Now, what to do with that list? So what I did is then I went out and purchased envelopes, I purchased stamps and yellow letters so I could write handwritten mailers to all the owners. I wasn't sure at the time how to get in touch with these people, but I had heard through the forums and through books that you can actually write mailers to these owners, so that's exactly what I did. And this coincides with the video I've made previously, back in the day, about 100-hour work weeks, and this is when I was working 100 hours a week. I would wake up at 3:30 in the morning and write handwritten mailers to these owners. And I did that for about a month, hoping that just one would respond and sell me their property. After I sent out these mailers, thankfully a few of them called back, and I think the most important thing to find out with these owners is why they are selling. If they're selling for a 1031 exchange, then a guy like me who's looking for creative financing, it was not a good fit. And unfortunately, with the Vegas market appreciating the way it was, I was unable to find a lot of owners looking to sell their property. So again, I was just looking for one, but I found that a lot of them that were calling back were looking to sell at retail price and wanted nothing more. And as an investor, the numbers absolutely did not work. So all I needed was one. After talking to quite a few owners, one person reached out, and it was the ideal fit from the start. He was distressed, he was out of state, he had a crappy property manager. He trusted what he would consider a property manager, but the guy stole from him, lived in a unit rent-free, let his buddy live in a unit rent-free, and it was an absolute disaster. The property went to shit, and here you have an out-of-state owner that wanted out. And here I am presenting an offer to purchase their property. It was a perfect fit. So right from the start, I figured out why he was selling. I figured out his equity. He owned it free and clear, which is the most optimal option for seller financing, which is what I was looking for. At the time I had about 20K of cash, maybe a little over that, maybe like 21 total, so I knew 20K was about the max down payment I could do, and I couldn't go to a bank, of course, because that's not 25% of the properties here in Vegas. So I knew I had to get creative, and so thankfully, going back to steps 1 and 2, I surrounded myself with such great friends and such great mentors that they were able to provide some insight into seller financing. And also by going to these meetups, I had met with a few people who had done something like this. So I had a pretty good idea of seller financing and what to offer to the owner and give him an enticing deal to sell me the property on terms. After discussing with him a few different phone calls and him discussing with his wife, he determined that a seller financing route was an option. So what is great about this is I now have him believing that it's the best option, and it absolutely is a win-win deal from the start. Before I even get into the numbers, seller financing should always be win-win for buyer and seller, which it turned out to be. So what I wanted to do is present to him 3 different options for selling me the property. Now, I knew he was going to have to take a big risk on me. I was a first-time investor, had no investment property, had no proof that I could actually close on the deal and take care of this property, because with seller financing, he still has equity interest in the property, in the sense that he doesn't own equity, but if I were to run this property terribly and I got foreclosed on, he now still holds, the property goes back into his name because he would foreclose on me, so he would still hold the property and need to sell it. Well, if I ran the property terribly and it lost $100K in value due to wear and tear, terrible tenants, etc., then he could lose a lot of value too. So he was putting a lot of trust in me. At the time, I did not get an appraisal. However, I had an idea that the property was worth about $240 to $250. And this was by running comps, talking with agents, and figuring out what we're selling in the area and at what price point. So knowing this, I now wanted to present to him 3 different options. $230 with about 7% financing, $245 with 6% financing, and then $260 with 5% financing. All options came with a $20K down payment. I told him that I'd pay all lawyer fees, both my side and his, and I would pay all closing costs. He agreed to option C, a $260,000 purchase price, 5% interest amortized over 30 years with a $20K down payment, and we have a deal. This was a great win-win for both sides. But now here comes the fun part. We had an official verbal agreement December of 2017. However, nothing was signed just yet. Over the next following months, we kept in touch quite a bit, wanted to make sure it was still a good fit. And by March of 2018, I decided to go get a lawyer to draft up a purchase agreement so that I could have a lawyer backing me, I could have an LLC set up. The seller never agreed to sign the document, and he didn't. And it was at this point where I started to get really anxious because he didn't sign it, but here's his reasoning. The property needed a lot of work. I had yet to see the insides of the property, and I was unsure of how much work was really needed here. He kept saying all of these things about it needs this, it needs that, and I should have trusted him more, but I was so anxious to get my first property that I wanted a signed agreement to know that I would be able to purchase my first property. He kept telling me it would need months. Need a few months. It would probably need until July or August. And this is March of 2018, so I'm like, no way, I don't want to wait this long. While I'm calling him and asking for updates and just wanting to touch base and make sure that he was still on board with selling, the Las Vegas market was appreciating at a very rapid pace. Not only were single families appreciating, multifamilies were just as much. Let's move forward to August of 2018. By now I'm starting to really get nervous. It has been 9 months since we agreed to buy and sell the property, and we still haven't closed. And it's around that time when he said the property would be finished. Well, by this point, the seller notified me that he was interested in getting a lawyer in order to close. So I started to feel much better because I felt like by him going to get a lawyer, this was him solidifying that he was interested in selling me the property. He picks out a lawyer here in Las Vegas after calling a few, and the lawyer looks really official. He's got a nice big office, and I thought, great. We're set to close. This is a great. August 2018, it's my birthday month. I'm gonna close on my first investment property. All of this stress, oh my gosh, it was all worth it because we're about to close. Little did I know it would still take a couple more months. Around this time, I order a property inspection because I'm ready to inspect the property to ensure that there are no defects. With the inspection, I walk the property with the current property manager to start the relationship and get a good idea of who she is, how she runs the property, and how much of a quality property manager she is. And in addition, I wanted to see the property in person and walk it, figure out if there's any issues with it. So this actually goes really well. The property inspector said the inspection went about as well as it could for a fourplex here in Vegas. Later, I found out that a lot of these fourplexes and multifamilies have deferred maintenance. And now on to his lawyer. My lawyer was excellent throughout this process. He was always timely, responded to emails very quickly, and was very professional. However, the seller's lawyer was not as good as my lawyer. Let's just put it that simply. Basically, I paid him up front. I learned that you pay lawyers up front in this city, and it took a long time for us to close. And a quick run through of what it was like dealing with this lawyer. Basically, we'd send over the documents and it would take 7 to 10 days to get any email response. And then of course he would need to talk with the owner. They would hash out the details. The owner would sign it, send it back over. In the process of dealing with a lawyer, my lawyer would look at it and say, this one thing should probably get changed, and you go through agreements. Well, it's one thing when you sit in a room with someone and you kind of come to an agreement on stuff. It can happen in 30 minutes. Well, when one person takes 7 to 10 days to respond in emails, any type of negotiation just takes forever. So after going back and forth a couple times, just making sure we had everything in the contract set up and everything agreed upon, his lawyer takes a 10 to 14 day, I can't remember exactly, it was almost a 2-week vacation, but the problem it was also sandwiched around, he was busy with other stuff. So he was busy, then a weekend would happen, and then 2-week vacation, and then actually right when he came back, my lawyer went on vacation for like 2 weeks. So this whole process extended a few months. And let me reiterate, when you're going through purchasing your first investment property, you have a lot of anxiety. You just want to get in, you want to purchase it, you've been talking about it for months. At this point I've been talking about it for nearly a year to friends, family, my network of investors, every meetup, and I still hadn't closed. And we're talking months of dealing with this lawyer of just ridiculous wait times on responses and emails, and it was getting very frustrating. Thankfully, by November of 2018, we had all the documents signed and we were ready to send it over to title. So I'm looking at finally closing on this property. So we sent it over to title. We gave them something like 3 weeks to close, which is more than enough. They had ample time to close in like a week. So there's no way that we wouldn't close at the end of November. So 2 weeks before closing, I called the title company, just wanted to confirm that they had absolutely everything they needed, and if there was anything they needed, please call me immediately because I really want to close end of November. So what happens? We get to November 29th. It was a Friday at 5 p.m. or Thursday, I think it was a Thursday at 5 p.m. I get an email from the title company saying, oh, whoops, the owners are, they live out of state, so we weren't able to get all their documents in time, so we have to send a notary to their house and we won't be able to close tomorrow. And I almost lost it that day. I had no idea that a title company could be so incompetent, how they had no idea how the owner lived out of state. They didn't even look into this beforehand to make sure they had everything set up to close on November 30th. So what ended up happening is we had to wait over a weekend, and then we ended up closing on like a Monday or Tuesday, have it officially recorded, and it was something, I think it was December 4th was the official day of closing. But if you think about it, with investment property, December 1st through 3rd, it was still owned by the previous owner, so he received rent for those days. So that's just another headache on top of a year of headaches. The final straw was me losing out on 3 days of income, which was really frustrating. But we closed, and thankfully, that was the official story and the official end to the wildest investment property purchase I hope I ever experienced. Here is the spreadsheet for the fourplex here in Las Vegas. $260 purchase, $20,000 down payment. One thing I forgot to mention in the video is we agreed to 5% initially. However, I jumped to 6.5% interest rate while the market was appreciating the way it was. The property had gained in value significantly since I agreed to purchase it, and I wanted to make sure that the owner still wanted to sell to me because it was still a deal long term and it still fit my investing criteria. So I wanted to make sure he was happy and it was still a win-win because that's just how I run business. So I called him up one day, basically told him, hey, I'll do 6.5% instead of 5%. So that's why the 6.5% right here. So the total principal and interest is a little over $1,500 each month. Property tax is $1,600. The insurance is underwrote at $1,400. Now that I've owned the property for a couple months, I'm finding that this number was actually really low. But this exercise is simply just to show you how I underwrote it. CapEx, I did it at 10% and repairs 5%. I mentioned in the video that the property was rehabbed pretty much fully before I purchased it, so these numbers are high. However, I like to put the number high just to be super conservative. There is no HOA. Utilities at $120 a month. That was from his word of mouth. He basically told me what he paid, so I underwrote for $120 a month. Added some vacancy and turned over at 2.5%. I didn't really know what to put here. The Vegas market right now, the rental market, you can basically have 100% occupancy at all times if you really want it. However, I included a little number here, again, to be conservative. Property management is 10% of gross rents. You'll see the gross rents right here, so it's just a simple formula. So right now, you're looking right here at negative. It's an investment property. You're supposed to make money, right? And you're seeing negative. Yes, that's absolutely true. I'm going to be making a video on why you would want to buy a negative cash flow property. I would highly recommend not ever doing it for most people. However, in some very specific scenarios, it makes sense. Keep in mind that this is the expenses that are estimated. If these numbers right here, the CapEx and repairs, were down to 0, this would cash flow really well. However, it is kind of alarming to see a negative number, but I'll touch on just a second why that's not too bad. So here's the cash flow. The equity built, this is an estimate. This is a pretty close estimate. It's not an exact figure. This is the equity built for year one. Keep in mind depreciation. If you don't know about that, there's plenty of articles online of why you get to count depreciation on real estate. I did a 20% income tax, so I save about $1,200. And when I purchased the property, it was worth about $300,000. So with the built-in equity with a purchase price of $260 is $40,000. So if you look at the actual real return, it's going to be about 217%. And this is why I invest in real estate. You can't get this figure anywhere else. I mean, 217% is insane. And to go back to the negative cash flow, that is why I'm willing to invest in this property. Negative $458 a year. I mean, I can easily absorb that. I'll keep my W-2 for as long as needed. I'm a pretty high income earner, so negative $458 a year. Just what, negative $38 a month is nothing. However, when you can get a return for 217%, that's pretty darn valuable. And I'll definitely touch on the negative cash flow, why we would even consider it in a future video. But that's how I underwrote this property.